Alright everyone, so today we're going to be going over the different types of candles and why these candle types work and what I use them for. So without further ado, let's go ahead and get into it. Alright, so first thing I'm going to look for on the charts. A lot of you guys may not know the difference between all these candles that are just sitting right here. This may just look like crazy to everybody, like you have no idea what's going on, right? So what I'm going to do is I'm going to try my best to break this down for everybody on the different candle types and, like I said, what they mean, all that good stuff. So obviously we'll break down the very basics. We'll start here. Obviously the red candles are indicating that we're coming down, and the green candles indicate that the stock is going up, right? So on and so forth. Now at the top, we have our different intervals, which you can see in the back right there. It says Tesla 30, so the 30-minute. All that means is that a candle is going to close every 5 minutes. So if it's Tesla 5 minutes, every 5 minutes, a candle is going to close. If it's Tesla 30 minutes, every 30 minutes, a candle will close, right? And the higher the time frame, the higher the time interval is going to be, the more confirmation that you're going to have in this trade, right? Or when you're charting or doing things like that. So there are a few candles that I watch that are very crucial that kind of let me know if I want to enter a trade or not, and really just an extra source of confluence. So let's go ahead and start there. I'll type it out real quick. So first you're going to have your bullish hammer. And then you're going to have your bearish hammer here. Bearish hammer. And then we're going to have your doji. Now, these are the three candle types I'm looking for to potentially take a trade. So right now, what we're going to do is we're going to try to find at least one example of each, show you guys what they are, what they look like, and why they work. All right, so let's start off first on the list. We're going to start with, we'll start with the bullish hammer, all right? So we'll start with that first. Let's do this. There we go. Yeah, so first on the list is going to be the bullish hammer here. All right, cool. Let's get started. So first we got to look and find a bullish hammer. Now it's going to be pretty easy on like a 30-minute time frame. Realistically, you want to drop down to a 5-minute because you're not going to be trading on a 30-minute time frame unless you're like swing trading, maybe, but I like to do just day trades and scalps, so it's not really my thing. So we're going to look here for a bullish hammer. Let's see if we can find one today. I mean, technically, let's see. Maybe let's not use today, for example. Let's go to, I'm trying to see if I can find a good example. All right, so this would actually be a pretty decent example here, and a pretty decent example of a trade I would take. So right here, you guys can see on the chart that we have this candle right here. Now, why do I care about this candle at all? Well, this is going to, all right, hold on. This is going to be the bullish hammer right here. Now, it's not perfect. Realistically, you would want little to no top wick and a pretty decent bottom wick. So I would really like to, I mean, that one's decent. I wouldn't take a trade just based off of that one though. I want to see like a good one where we actually have some good continuation. Try to find one. Let's see. Okay, right here. This is actually a pretty good one. Where'd it go? Yeah, so right here. Right here, we do have the bullish hammer that I was telling you guys about right there. Right? All it is a pretty decent bottom wick, or a pretty good, bottom wick with a barely or no top wick. and it literally looks like a hammer. So like here's the handle of it, and then here's the actual hammer part right here. And it's just telling you that we want to go up and continue upwards. So like something that I would look for with this would be like a demand zone here or an order block, which we'll get into more in like another video. But we'll go ahead and drop the order block there, and you guys can see something that I would have taken off this trade would have been the order block with a bullish hammer. And it actually, there's a bullish hammer right here too. So it's like, it's actually happened quite a few times. We'll circle this one too. So we got two bullish hammers, and all we're looking for is going to be the move up after we close the hammer candle. So on the 5 minute, we'd wait for the close, and then we would look to take entry, right? And you guys can see it continued up to almost 685. You know, that'd be a pretty good trade right there. Same thing here. We got the hammer candle, and then we continued up from there. We made a higher low, continued higher, right? There was a little bit more choppiness on the chart here than the second one, but still you can see you're still able to identify this bullish hammer here, and that, you know, it played out both times. So it's another source of confluence I use. But now we're gonna go ahead and move on to the bearish hammer, and we'll see if we can't find a good example of that. So bearish hammer, like I said, if we go back to Tesla, we marked it out here, I believe. Yeah, so we went over bullish hammer first. Now we're on the bearish hammer. I'm gonna try to see, I feel like there was one today on the 5 minute. I'm gonna look, I don't see any yet. That would be pretty close right there, this candle. Let's look on QQQ. See if we have any bearish hammers on the Qs. I mean, this is decent. It's good enough. Right here, you guys can see we had a pretty decent upwick here. Nothing crazy, but it's a pretty good example. We have this rejection right here out of the supply zone. We have a bearish hammer, which is like the same thing as the bullish hammer, but reverse. And then you could look for downside from there. So as you can see, as we rejected here, we closed that bullish or bearish hammer on the 5 minute, and we ended up going down quite a bit, right? I mean, you guys can see, look at how far this thing went down. It's a big move just off that bearish hammer if you're looking at just these candle types, right? Now, that is going to be the bearish hammer, and I like to, like I said, I don't just trade off of these alone, but I like to use these in source of confluence with things like supply and demand zones, order blocks, break of structures. Like those are all things I like to look at. So these are just another source of confluence. So last but not least, we want to look for dojis. Dojis literally just mean you are looking for a reversal. So how I would put it is, if we look at like maybe a 15-minute time frame, maybe we can find one. Kind of right here. Right here is kind of a doji. I'm not going to sit here for, you know, a long time and try to find the most perfect example. But you guys can see right here, we almost have one right there. It's pretty much a doji, I would say, on the 15-minute time frame. So all it means is if the market is pushing up or the market's pushing down, but let's just use if it's pushing up, for example. If the market is consistently pushing up, and then all of a sudden we stop, what is that signaling to us, right? Buyers are no longer in control, sellers are trying to step in. So if we close a doji, meaning that there's indecision in the market, that tends to mean reversal. So when I see doji, I'm looking for a reversal, which would be this candle right here. Now, would I take it just off of this candle? No, but there would be other things I'm looking for. Again, you know, talking about a little bit about my strategy. We'll make more videos on it if you guys like this one. I would go ahead and add an order block right here. Add an order block right there. And not only would we have the doji, it would be a lower high, as you guys can see. Lower high, a doji. and we're getting a rejection off the order block, that would tell me that this is a good trade to take. And as you can see, the trade obviously played out, right? You can see here, pretty solid trade. Actually, very solid trade. So that would be the doji. Like I said, it just means reversals. So anytime I see that, I am looking for a reversal. Now, again, I'll just kind of rephrase this here. The bullish hammer is going to be you're looking for upside after you see that close. The bearish hammer is going to be you're looking for downside after you see that close. And then the doji is going to be you're looking for a reversal, regardless of the close. So if, you know what I mean, like it's neutral. So it's basically if you're pushing up and you get that neutral close, it's letting you know it wants to come down or reverse. And if you're coming down and you get a doji, it's letting you know it wants to reverse to the upside. So whatever it is, it's the opposite, right? So whatever the trend's currently doing, it's going to be the opposite of that. Now, those are the three candle types I use on the daily. I also wanted to talk about, just some basics a little bit also, which would be things like this. Like, I know some stuff might just go over your guys' head that you guys have no idea what I'm talking about. Like wicks. These are the bodies, these are the wicks. Now, what does that mean? So if you go like to your candle types, you can do all these different types of candles. You can do lines. I don't know how you would ever trade like this. That's tragic. But I just use regular candles. I know some people do like the high Kanashi candles or whatever they are. I don't really care for them that much. But I just like to use the regular candles, and you can see that it is wanting to tell you where it wants to go. So we're going to wick up. That just means that price pushed up there within that 5-minute interval. So these are just telling you that it went there. So here you can see on this candle, price did push up to there at one point, but it also pushed it down to here at one point. And then the body is just where it ended up closing, right? So closes, wicks are just where it went. So again, wicks are where it went, bodies are where it closed, right? So those are things that obviously you do want to know and want to look for. But you obviously don't want this to seem super complicated when you're trying to look at all these things. So it's really key to break it down. Also, I do not like to use pre-market. I know some people this is what your charts would look like with pre-market on. I prefer no pre-market. It makes it a lot easier to chart. And it's helped me a ton. I don't know if it helps anybody else, but it helped me a ton. Same thing with, I just use regular trading hours, and it is a lot better. But as far as charting, the things that I look for are going to be on the 30-minute and the 4-hour time frame. That is where I look to do my charts. And then I look to trade on the 1-minute, the 3-minute, and the 5-minute. These are all the time frames that I use to actually look for my trades. And then as far as charting everything out, I use the 30-minute and the 4-hour. So hopefully that helps you guys a ton. And if you guys have any questions, feel free to comment it down below in the comment section. But I appreciate all of you guys watching the video. And if you guys like this video, we can do more videos like these. So let me know what you guys think.